Hello and welcome to today's episode of Chazin-the-Dream. I'm Ethan, your host of this amazing workplace culture podcast, and I'm really excited today to have with us as a guest Dave Bookbinder, who is the Executive Director of Valuation Services at A. Flanagan. He's the author of not only one, but two best-selling books about the impact of human capital, in other words, the people, in terms of valuing business enterprises. So the first book is called The New ROI, Return on Individuals. And the second book is The New ROI, Going Behind the Numbers. In addition to being a world-renowned author, Dave's also the host of a business talk show called Behind the Numbers. The show's enjoyed in more than 100 countries and ranks in the 2.5% of all programs globally. He writes about business and leadership at CFO University, and he also serves on the Enterprise Engagement Alliance's Executive Committee for Accounting and Metrics. So everybody, I'd like to introduce you to Dave Bookbinder. Dave, welcome to Chazin-the-Dream. So Dave, welcome to Chazin-the-Dream. First thing I wanted to ask you when you were kind enough to offer to come on the program was the new ROI and return on individuals. I guess I'm really fascinated personally with where that came from, your background, your career, and the value that you see in organizations who care about their people actually valuing their people. Like, where did this come from?
And so much to unpack in that one statement, Ethan. And I certainly don't want to ramble in my response. So let me break it down by starting this way. First, thanks for having me on the program. I'm thrilled to be here. New ROI was born as a result of my professional life as a valuation consultant. So in my career, I've helped thousands of companies in valuing their businesses and their intellectual property assets. And one of those IP assets or intangibles is people. And never thought that our profession used methodologies that really told the whole story about the value that people contribute. And, oh, by the way, you've heard every CEO on the planet pound the table and say that our people are our company's most valuable asset. But where do people live on a balance sheet? Spoiler alert, they don't. So your most valuable asset doesn't live on a balance sheet, and my profession doesn't value this asset in a manner that I think really tells the whole story. So I had to be really super careful when I first wrote an article about the value that people contribute to a business, and never intended it for it to be a book. But it wound up becoming a series of articles. And then ultimately I needed to make it a book because so many people kept asking me, what are you going to do with this? You have to keep going. So there's a personal component involved in this as well, but I'll let you continue on with your dialogue.
No, not at all. This whole notion that you just said something, I think people need to hear it in a little bit more depth, is what do you mean that there's no line item on any financial document that actually adequately measures the value of people in an organization? It's called payroll.
Yeah. So people usually are thought of as an expense. It's salaries and benefits, to your point, payroll. And when you think of an expense, what do you want to do? You want to try and reduce expenses. But when you think about assets, you want to invest in them, like your home. So for the audience, a balance sheet is the financial statement that lists all the assets and liabilities of a company. And in the assets section, you'll see things like machinery and equipment and vehicles and things like that. But there's no spot for people. People are actually subsumed into a category called goodwill, which happens after a whole accounting exercise, which if you really want to get wonky and go down a rabbit hole, we can do that. But what I wanted to share with you more importantly, I think, is the personal component that led me to the new ROI construct. Please. And that is, I was a single dad for about a decade. And during that period of time, I had the opportunity to work for some great leaders who led with empathy. They understood that I had a special circumstance. And if I had to go home to pick up a sick kid, they trusted that stuff was still going to get done. And I would walk through fire for them because they treated me like a human being. I also had the opportunity to work for some folks who I'll say didn't quite get it. And they might roll their eyes and say, hey, it's really nice that you get to leave at 3:00 to go pick up your kid. Like I was going to play golf. You never understanding what I was dealing with at the other end. And those leaders didn't get my best effort. And what I really just described to you was the construct of employee engagement. And when I was engaged, when I felt treated with dignity, respect, and appreciation, I would provide the discretionary effort to going above and beyond that leadership is always striving for, that the other folks probably didn't get.
Talk about a statement with so much to unpack. I mean, first of all, it almost sounds to me as if the people who are engaging you as a leader with empathy, respect, caring, trust, they were leaders. The ones who weren't, I don't think I'd call them leaders at all.
No, I mean, their title probably said leader, but they were really managers, and a lot of them were what I would call manager by spreadsheet. So, for instance, I'm sure your audience can relate to this, where maybe in a performance appraisal, they're only judged based on amount of production, whatever that looks like in your particular industry. Yeah, in my world, it's how many hours did you bill? And if you're only looking at performance metrics, you tend to miss the other contributions, those little intangibles that people bring to the table in fostering relationships that deepen your ties with your customers, that make them stickier and make them want to buy more and work with you more.
Yeah, this is where we need to go. And I love the way I'm tap dancing around the edge and you just pulled me into the abyss. Is one way to value employees is to look at the monetary things, like you said, the cost, the kind of salary, the benefits, and kind of look at that. Can you talk more about from your experience in the valuation world of understanding other employee contributions and those intangibles? You talked about client relationship cultivation. How do you define those things that maybe other organizations haven't historically looked at when they're in the process of valuing their people?
Yeah, lots to talk about in terms of how my profession values people. And I'm going to try not to get wonky and loosey here. If I see you nod off, I'll know I've gone too far.
Well, I'm not going to nod off because I live this stuff and breathe it, but I'll corral. Yeah.
Then maybe you'll appreciate some of this as you continue to have this conversation with others. But in the valuation world, people wind up on a financial statement, on a balance sheet, after a company's been acquired, in this exercise called a purchase price allocation. So a company buys another business. We have to value all of the fixed assets, the real estate assets, the intangible assets, whatever's left over is goodwill. People are valued in what's called a contributory asset way, Ethan. What that means is they're not a direct asset, if you will, where they get their own line item. But the idea here is you can't really have a customer relationship asset, for instance, if you don't have a workforce servicing those customers. So we value the people. I'll get to the method in a minute. We value the people basically to account for a rental charge, if you will, against the customer relationship value. It's a deduction from the customer relationship value by virtue of this rent expense, if you will, in quotes, for the use of the people. The method we use to value people is called a cost to replace. And for the HR folks out in your audience, it looks a lot like a turnover calculator. So the things that we have to think about are how long would it take to replace the individual? And what was the salary of the individuals? What's the learning curve look like? How many people are going to be involved in the interview process? All the costs. And the costs wind up essentially being a fraction of an employee's salary. But we all know from data and just intuition that an employee's contribution is actually worth multiples of their salary. Otherwise, you never would have hired them because you're all trying to get a return on your employees, right? And I'll add one more little nuance to you. The workforce that we're valuing, Ethan, is only the acquired workforce because intangibles can't get booked unless they're acquired. So extreme example for you, Tony the Tiger, well-known trademark for Kellogg's, right? Everybody knows Tony. Tony was developed in-house. So Kellogg's can't put Tony the Tiger on their balance sheet. But when they acquire Keebler, the Keebler Elves can go on the balance sheet because that's an acquired intangible. Make sense?
Are you saying from a humanistic application of that, I can't, in this exercise, value my existing workforce?
Correct. Yeah.
Okay.
So yeah, lots of limitations here. Lots of limitations. And to get back to your original question, what's missing is what I call the intangible within the intangible. So employees, the assembled workforce is a intangible asset as a contributory asset, as I just described. But there's this intangible component, the things like, let's talk about how long somebody's been inside an organization. The folks who have been there longer probably have what we'll call institutional knowledge.
Intellectual capital.
Yeah,
Sure.
they know where to go, who to talk to. They know the nuanced stuff. Like if Ethan has a scowl on his face today, then today's not the day to ask Ethan for, budget for the next employee outing. You can't replace that stuff. When that walks out the door, it's gone.
The whole notion of employee worth is what this podcast is about. And this is why, Dave, I'm so excited to have you on the program, but not talking wonky accountant speak, but rather enlightened kind of, all the research you gathered into both of the books about valuing in people.
Yeah.
Can you share a little insight into employee worth on a more humanistic level?
Yeah,
I mean,
absolutely.
you said, for example, length of tenure and my experience, and there are things that I know.
Yeah.
How else do you help organizations understand the not so tangible?
Well, can we talk about engaged employees versus disengaged?
Oh,
You know
please.
the Gallup stats, right?
Please.
One out of 3 people show up at work interested in being there, right? So when you think about that, most people are going through the day wishing they were somewhere else, or certainly not where they are. If you could turn that engagement needle up to the right just a little bit and increase engagement, imagine what that would do. So when we're looking at the value of the workforce, we don't consider engagement at all. But to break it down for you, and we'll call it the humanistic way, I would characterize it this way, okay? An engaged workforce is a more productive workforce. A more productive workforce is going to create more discretionary effort. That's going to translate into greater profits. And all other things equal, the greater profits is going to result in a greater valuation. So it's all connected.
I love this notion of engagement, but I feel like that's only a partial kind of slice of the cake you're giving me. And I want the whole cake. So I guess the other pieces, Dave, are what are the things perhaps that you look at that aren't under engagement? For example, because I'm engaged, I love working here. I love the culture you created here. I'm likely to go out on my own and find great people to bring in. I'm going to go out on my own and speak as a brand ambassador. I'm going to come up with new ideas to make more money or reduce cost. I mean, how do you value that inside the employee piece of the organization?
Well, currently we don't, but and I'm hamstrung by methodologies that I have to adhere to, but I'm hopeful that someday, as SEC disclosure requirements are becoming more robust, that maybe we're going to expand this circle just a little bit. But yeah, what you're talking about, it starts with engagement, right? Because when you get these engaged workers, then it talks about what you just described. They're going to be your brand ambassadors in the marketplace. And let's be real, your employees can either make you or they can sink you on Glassdoor, which is going to impact your ability to not only retain people, but your ability to attract and recruit good talent. And there's real cost and turnover, which we just alluded to here, even greater than what we actually think it is. So that's one huge component there. But there's other subcomponents to this engagement thing, Ethan. And this is not investment advice, so please don't misconstrue here. There's an ETF, an exchange traded fund, that is managed by a company called Harbor Capital. And it's predicated on something that's called the human capital factor. Okay. My friends at Irrational Capital developed this based on thousands and thousands and thousands of employee surveys that they've done and millions of data points analyzing the correlation between engagement and investment performance. So they can actually, and their website at Harbor Capital, they'll show you that the research and the data that underpins it, but they've broken down the employee, that element into subsectors like empathy. How important is empathy to you as an employee? And what's the impact of an organization that has empathy? Respect, trust, appreciation. There was an example that I remember, I'll never forget this one. Just by saying thank you in a factory for a period of 30 days, increased production by like 6 or 10%.
Yes. I mean,
so yeah, this human capital factor isolates, and they can actually predict performance. And when I say performance, I'm talking about outperformance, because the companies that are doing the right things for their people and creating these great cultures, they'll outperform. And this ETF's investment thesis is to buy these companies that are doing the right things so that you as an investor can generate a return that's above market.
It's not an implicit assumption. I mean, it's the genesis of everything you're saying, but I just want to articulate this. And you tell me if I'm right or wrong. In the field of assessing engagement's monetary or measurable impact on organizations, when you look at human capital and you care about your people and you treat them that way, that increases performance, which I'm hearing you say, I think I'm hearing you say increases productivity, which increases profitability. Did I miss something?
No, you got it spot on. Exactly correct.
Okay. So now this circles back to Dave Bookbinder. So you said that earlier in your career, you worked in organizations that were amazing and treated you with respect. And that was, leaders. And you talked about times where employers didn't necessarily always treat you that way. I guess, when did you ultimately decide to go down this path of exploring investment in people and kind of creating a channel to talk about the value of valuing employees? Like, where did honestly the behind the numbers come from, and what is that? Spend some time talking about that if you are okay.
Yeah. Okay. So the two separate issues there, but they're sort of kind of related. So let me weave them together for you. When did I first realize that this new ROI thing needed to happen? That was probably almost 10 years ago by now. But it was just something I had been kicking around in my head and didn't really put it to paper. But in conversation with a lot of folks, I was encouraged to write something. And honestly, the first thing I ever wrote, Ethan, sounded like a rant. And my personal board of directors advised that I would be better suited to reframe the conversation just a little bit. You got to be careful not to throw stones at your profession and the accounting profession for all the reasons we described. But you got to be proper in how you convey these things. And that's where it all started. And the second book is called The New ROI, Return on Individuals, Going Behind the Numbers. And the hook there is Behind the Numbers is the name of the business talk show that I do. It's internet television, podcast. And it's the second book, The New ROI, Going Behind the Numbers, is a compendium of the conversations that I've had on my show, where I've had leaders, whether it be CEOs, CFOs, consultants, you name it, folks who are climbing the same mountain, sharing their stories about what they've done around corporate culture and leadership and how that's translated into the impact on their business.
From your perspective, from your kind of lofty position, kind of seeing how this new focus on employee ROI, how it's manifesting, do you see that we're at a tipping scale point? Do you see that this is taking on a fundamental shift in mindset? Like, what's your experience and perception of this as a trend for 21st century enlightened organization?
I think without question, I think we are at a tipping point. I think it's a combination of a number of things. In my view, that human capital is the last bastion of value creation. Private equity and other firms have tried over the years to generate value by cutting costs. And it doesn't work, right? For a whole boatload of reasons. But what you're seeing now is you've got SEC disclosures that are requiring a little more robust disclosures from registrants in terms of what they file and how they disclose their investments in people and the various components there. Admittedly, that could be better and more robust, but baby steps. It's a good start. And those requirements were actually mandated during the middle of a pandemic. So just think about that in the middle of a global pandemic, when we were all starting to understand the value of delivery drivers and grocery store workers. Now we're starting to see that mandate for disclosures for public registrants. So I don't think there's a coincidence there. You've got private equity firms that are making investments in companies, and now they're leaning towards doing it through an ESOP vehicle, so an employee stock ownership plan, right, where the people are invested in their shareholders in businesses. Conversations that I'm having on my show and anecdotally with clients and prospects and other folks in the market, they're recognizing that it really is the people that are going to make or break them at the end of the day. It's your assets go home at the end of the day for the most part.
Is this like, not just an observation? Is this kind of, I guess, trend that you're seeing? It sounds like a few things. I'm trying to kind of get it straight. It sounds like it's a shift from shareholder value to stakeholder value, where stakeholders are employees first, and then maybe clients second, or whomever. And it also sounds like it's a shift in mindset where you're not just valuing employees, but coming up through engagement. It sounds like you're talking about empowerment, autonomy, giving away control, which used to be kind of up at the top, so that people have a new relationship with organizations, meaning a more, I guess, equitable. I'm really kind of grappling to kind of verbalize it. I guess I should shut up and let you verbalize it.
Well, no, you've done a good job with it, honestly. But my take on that whole thing is, I could have spent a lot of time ranting and talking about how we value the workforce and the things we can do to better that calculation, which I do touch on. But that's not the focus. The new ROI, return on individuals, really is about the contribution that people make to the enterprise value. Because my lens is, even if you're the most cynical CEO on the planet and you think that your people don't matter, they're all fungible, don't let the door hit you in the butt on the way out, that kind of person. If you understand that if you create a culture and environment where the people feel appreciated, valued, and nurtured, you're going to benefit in terms of the growth of the value of your business, then maybe you'll actually lean into it for no other reason than you're being selfish. So it's that lens. It's about what does the contribution of the workforce do? What do the people bring to the value of the business? I think that's what gets more people's attention.
Yeah, I hear exactly what you're saying. And I've heard it from other folks who are kind enough to come on the show, but I always hear in my head the kind of the distorted feedback from that CEO, which is, I hear what you're saying, Dave, and I understand conceptually the value of putting our people first. And I understand conceptually a great culture, but it's kind of like the old adage on advertising, talking about my people. Half of what I spend on my payroll or my headcount is wasted. I just don't know which half. And culture sounds great, but it sounds all warm and fuzzy. I mean, what's from an employee ROI perspective, the new ROI, how do we counter that in a more meaningful, honest conversation to get that enlightenment?
That's a great question. And there's a lot of different ways you can answer that, but I'm gonna go towards the most cynical CEO who understands what drives business value. So business value is really the present value of the future benefits of a company brought back to today's dollars at its cost of capital, right? It's what's the business worth going forward. It's not just what you did yesterday, last year, but all the years to come. What if I told you that the companies that do the right thing, the great companies, the just companies, the great places to work companies, all enjoy a lower cost of capital? Well, Ethan, the way the math works is the lower the cost of capital, the higher the valuation, all other things equal. So why wouldn't you want to be one of those great places to work type companies?
From, as you said, not so much an enlightened perspective, but from a really kind of selfish perspective almost, doing these kind of things has a very measurable positive impact on the future financial value of the current organization by implementing more of these people-driven strategies.
Yeah, because look, there are some leaders, and you don't have to be a CEO to be a leader, right? You know that.
Yep.
So there are some leaders who understand that these things that we're talking about matter, culture, environment, respect, appreciation, all that stuff. There are others who think, yeah, that's all just woo-woo nonsense, and leave that for my HR people. They don't understand the numbers. But if you want to talk numbers and you want to talk math and present value calculations and impact on your enterprise value, well, I've got evidence for you.
Right. It's the evidence. It's the being able to quantify the shift in focus from strategy and operations to people monetarily. Yeah. Oh, okay. So I guess, kind of one of the last things I wanted to ask you is, before we can unfortunately kind of wrap up, is if somebody is hearing what you're saying and they want to pick your brain and they want to learn more from you based on all your work in the field as kind of like a thought leader, they want to schedule some time with you, how would they get in touch with you? What's the best way?
I appreciate that. I'm always happy to chat with people, whether it's about the new ROI construct or whether it's about valuation or fantasy football or whatever they want to talk about. So number of ways you can find me. First of all, you can find me on LinkedIn. I'm Dave Bookbinder. You can find me at my firm's website. I work for Hafley Flanagan. We're a full service accounting firm. We also do consulting services that include things like leadership development, executive coaching. You may know a thing or two about that if I'm not mistaken. I lead the valuation group there. That's another place you can find me. You can learn more about the books at newroi.com or Amazon. And Behind the Numbers is available anywhere you get your podcasts.
Yeah. So, I mean, Dave, there's a number of things that I think people, if we kind of compartmentalize how they can benefit from speaking with you, I'm going to put all of your contact details you just mentioned below. So if anybody out there is there listening to Dave, I mean, there is truly nobody else like Dave in terms of what he's done and what he can add to your organization. All the contact details will be below. And Dave, so I just wanted to say before we kind of wrap it up today, I really appreciate you coming on the program and sharing your insights. It's time for people to start focusing on the new ROI of employees and people. I just really appreciate you sharing your vision and your knowledge.
It's my pleasure. Thanks so much for having me.
No, it's my pleasure.
No, really, it's my pleasure.